Hi there, thank you for viewing this week's video. Let's look at the indices and check out how they perform, also the outlook for next week. As expected, even though the US economy data is better than expected, the Ukraine and Russia conflict has continued to weigh on the market as the US market consolidated in a range as they are trying to find its direction. High commodity prices have also limited the market's movement, especially these high prices lead to higher inflation. The Asian market has been less luster as the two major indices ended the week lower. Let's take a look at the chart. So we'll start off looking at the Dow. Over here, we can see the Dow started the week lower, but managed to have a fight back at the end of the day, but that does not help the index to go higher as it traded within a range over here. Now, the end of the week, we saw some selling, but at the end of the day, the index has managed to push back up to close higher, and that has offered the a glimmer of hope. So it is understandable that the week has been consolidating as the market struggle to digest the situation of Ukraine and Russia war. So we are looking at probably this to continue next week. And although this offers a glimmer of hope, the candle that creates a long lower shadow, which may suggest some rebound. The most important thing is that this resistance at around 34186 must be tested and broken. As such, then we may see some more recovery or some more upside towards the next resistance at 35,025. Now, it is a consolidation, means that it could be both direction. So the support that we are looking at is this, that is going to be very important next week, 33080 thereabouts. And if the index breaks below this support, then we may say hello to the bearish market as the Dow is likely to come back to test this support at 32260. So it's going to be a crucial week ahead, and hopefully we can see some improvement in the Ukraine and Russia war, where the ceasefire can continue and have a peaceful talk ahead. Now, let's take a look at S&P 500. It has a similar movement to the Dow as it consolidated throughout the whole week in a tight range between this 4281 to 4415. Now, the candle patterns at the close is also the same, is all similar, as it may suggest some rebound. So similar to the Dow, of course, it must retest its resistance at 4415. If not, then breaking this 4281 support may suggest more downward movement, and this support for S&P 500 is around 4111 thereabouts. It may be tested, and if this support 4281 is broken, then we may see downtrend continue. So as you can see here, we are very much in a downtrend with a significant downtrend line plotted here, and there might be another downtrend if this resistance is not tested, 4415 resistance is not tested and broken. So let's move on to Nasdaq. So Nasdaq is also in a very tight situation where we see that it has been in trading range for the most part of the week until the inflation fear came back to hunt the index on Friday as it ended the week at an uncharacteristic low. The week ahead will be challenging as the core CPI data is going to be released in the middle of next week and is likely to be higher or stay high as commodity prices shot through the roof. Though the Fed is less hawkish due to the ongoing war, but the chart is not looking good for Nasdaq as this can be a lower high. And if we move back to retest this support, it confirms this lower high and the next lower low is looking. Unless the Nasdaq miraculously, rebounded for some reason and retest this resistance at 13828 and broke up from there, then it form a higher low. You can form a higher low and retesting this resistance over here. This major resistance, which was tested twice, could suggest more upward movement or change of trend. Okay, so next week is going to be a crucial week. So we're going to watch out for support and resistance. Now moving to the Asian markets, let's start off with STI. The STI remains weak as it failed to form confirmation candle for the bullish harami pattern over here. So the index consolidated in a tight range for most part of the week until Friday. It closed lower, breaking its support on the way down at around this 3239 level. So as it breaks down, it can suggest that the downtrend can continue. Now, let me just clear the chart over here. You can see that we have one peak over here, and then we have a higher peak or a higher high. And then, of course, if STI have some rebound, it may have a head and shoulder pattern if it doesn't rebound this above this 3299 to clear up, to change its trend. If it forms this left shoulder, then we may have a head and shoulder patterns formed, and this head and shoulder pattern can lead to a further downside with projected level to this level, where we may be seeing the index goes as low as 2955 if the selling pressure continue. Okay, in the meanwhile, we have a lot of support before this projected support get tested. We have this support level at 3159, which was a previous resistance. The key support at 3065, followed by this around this 3039 support. So all this support has to hold. If not, it will probably lead to a lot of downside to retest this 2955 projected level. Okay, so let's watch and see how the index react next week. And like I said, it's going to be a crucial week ahead, because if no rebound to break out from resistance, we may see a bearish March. Moving to Hang Seng. Last week, we mentioned that it's hanging by a thread where it is on this major support at around 22723. And after 2 days of struggle, the Hang Seng Index gave way and breaks below this support level. Now the situation worsened as it nosedive further down towards its COVID low around 21139. Okay, and technically, if you look at the candle on the last Friday's closing, it is an inverted hammer, a white candle, inverted hammer, and it offers a glimmer of hope for rebound. But what must the index do is that it must fill up this gap over here, then revisit this previous support and resistance at 22723 and break up from there. Then we can see a change of trend. If not, there is a high chance that the index can revisit this low at around 21139, as I mentioned earlier. Okay, so we are looking at a very bearish chart, as seems like the market couldn't hold at a support. So wrapping up, we can see that the charts of the global market, the charts doesn't look very good. Okay, and they are likely to be affected by the ongoing conflict and commodity prices shooting up the roof. Technically, when you see support keeps breaking, we know that it is a bearish market, especially when you were to refer to the Hang Seng market. And next week will be crucial, like I say, as the core CPI data is released and more economic data is released. And let's see how the market will react before the Fed confirm the interest rate hike, which is 25 basis point, which is 0.25. And going forward is strategy in increasing the interest rate. So what we call a slower pace, I beg your pardon, a slower pace would probably help the market, but a fast-paced rate hike would definitely bring down the market for short term. But over the long run, we still need to see peace in Europe, and then and the market return back to its growth. Okay, so again, watch for the support and resistance of the individual indices, and I will see you next week. Thank you for viewing this video.